Hello, good day, guys. My name is Nick, technical analyst of SuperForex. Today, we'll be looking at a technical analysis on the currency pair, gold. And first, we'll be talking about fundamentals, and then we move right down to technicals. Right now, we can see that gold price comes under renewed selling pressure amid reviving USD demand, while hawkish Fed expectations has elevated the US bond yields underpin the greenback. Recession fears lend support to safe haven XAU USD and help limit losses. We have seen that gold price struggles to capitalize on the previous day's modest rebound from the 1807 to 1806 thresholds area of the YTD low and meets with a fresh supply on today, Tuesday. The XAU USD remains depressed through the early European session and is currently placed just above the $1,810 level, nearly 0.30% for the day. Following a modest pullback from a 7-week high on Monday, the US dollar is back in demand amid expectations for further policy tightening by the Federal Reserve. This is in turn, or rather is seen as a key factor, exerting some downward pressure on the US dollar denominated gold price. The markets now seem convinced that the Fed will stick to its hawkish stance in a wake of stubbornly high inflation. Now, our bets are this, that being lifted by personal consumption expenditure PCE price index from the United States, which indicated that inflation isn't coming down as fast as expected. Moreover, several Fed officials stressed the need to raise interest rates to bring inflation down. This, of course, has remained supportive of elevated US Treasury bond and further drives flow away from the non-yielding gold price. Investors, meanwhile, remain worried about economic headwinds stemming from rapidly rising borrowing costs. This, along with geopolitical tensions, will keep a lead on the overnight optimistic move in the equity market and lend some support to the safe haven gold price. Nevertheless, the prospect for further policy tightening by the Fed should continue to boost the greenback and favors the XAU USD bears. Gold price seems poised to weaken further below the 1,800 landmark and test the 100-day simple moving average support, currently around the 1792 dollars area. This is checking on our daily time frame. Now, technical levels to watch. On a technical aspect, we have a total daily price, last price to be at 1812.22, and a total daily change of minus 5.10% and minus 0.28%. Of course, today's daily open at 1817.32, and we have our daily SMA 20 to be at 1858.92, daily SMA 50 to be at 1865.96, while the daily SMA 100 to be at 1793.84, and of course, our daily SMA 200 to be at 1775.83. So what to expect from this? We are looking at a respect of a very important support zone, 1, 2, and 3. We're expecting a reversal to the market gradually. And if we're to make an entry at this point, we're looking at about 98 pips from the entry point, of course, which is good money. So that's our technical analysis on today's currency pair, the XAU USD gold. Now let's move over to the stock markets.
Hello, welcome back, guys. And on today's stock market, we'll be having a look at Netflix. And headlining, we're seeing that Netflix is cutting its prices in 30 countries to try and keep up fiercer competition. Now, Netflix has been cutting its pricing in several of its smaller markets. In the latest tweets on the video streaming services efforts to keep its recently revived subscriber growth rolling amid stiffer competition and inflation pressures that are pushing more households to get discretionary spending, of course. The lower prices that began to roll out earlier this week affect more than 30 of roughly 119 countries where Netflix streaming services are available. An expense, of course, that has enabled the company to attract nearly 231 million subscribers. The areas getting lower prices, including Middle East markets in areas like Yemen, Jordan, Libya, and Iran. And also European countries such as Croatia, Slovenia, and Bulgaria, and sub-Saharan African markets. We also can see that Netflix isn't changing its prices in any of its largest markets, including the US, where it has been regularly increasing its rates during the past 4 years to help offset the cost of an programming lineup that includes popular series such as The Crown and Stranger Things. Although Netflix has established itself as the largest video streaming service, it has been vying for viewers with other deep-pocketed rivals that include Apple, Amazon, or Disney Co. And at the same time, stubbornly high inflation is causing more people to tighten their budget. However, those factors contributed to Netflix losing nearly 1.2 million subscribers during the first half of last year, prompting the company to introduce an ad-supported option of its service that costs just $7 per month in the US, almost less than half the price of its most popular plan that helped Netflix bounce back during the second half of last year, when it added about 10 million subscribers. A recovery that has made its longtime CEO and co-founder Reed Hastings comfortable enough to step down last month. On some other end, in another attempt to gain more subscribers, Netflix has started to crack down on rampant password sharing that has enabled estimated 100 million people worldwide to freeload on its service. Netflix has already clamped down on the practice in Latin America and several other countries, which at that time we had seen a decline in the commodity. But now, of course, with new rules governing the use of same password in multiple households are expected to be imposed in the US by the end of the March, Netflix new co-CEO Greg Peters made a hit last month during a quarterly conference call that the company was examining ways to attract more subscribers in smaller markets, although he didn't say anything specifically about using lower prices to lure. There's a bunch of people around the world in countries where we are not deeply penetrated and we have more opportunities to go attract them, Peter has said. Now, this, of course, will have a dig on the market, with the latest news being that Netflix lost 920,000 customers in the US and Canada last year, leaving it with 74.3 million subscribers in that region at the end of the year. So what to expect from this technically, with the most recent cutting prices in countries to try and keep fiercer competition, we, of course, will see more decline in Netflix, of course, for a short period of time. Maybe a halt to the most recent support zone at 313.39, and then a possible bounce back upwards to about 333 pips thereabout from that entry point, of course, which we can say gives good money from that entry point. So that's our technical analysis on today's stock market, Netflix. I remain your host, Nick. Bye for now.